Welcome everyone to Best in Interest. This is Shane back for a Stock Pick of the Day video. It is April 7th. We're going to take a look at one out of the consumer discretionary sector. This is Tractor Supply. This is a retailer. Before we get too far in the video, if you can do me a big favor, hit that thumbs up button down below if you find any value in the content. If you're a dividend growth investor, make sure you subscribe to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click that notification bell down below so you're notified whenever I put out any new content. Along with this Stock Pick of the Day video series that I do Monday through Thursday when the markets are open, we take a look at a company stock that's pulled back on the day, run it through my screener, see if it makes it onto my watch list. Just because it makes it onto my watch list does not necessarily mean I'm buying. It just means I'm interested in doing more of a deep dive into the financials of the company, and then doing a discounted cash flow analysis to try to give myself a range that I'm willing to pay for the company. And I do a portfolio update video every Sunday where I show you what I'm doing in the market, what I'm buying, what I'm possibly selling, any dividends received, any options I'm in, all out in the open. I think it's important to be transparent for those of us in the space, space talking about finances, to show what we are doing so you can see it's not just talk. So I back it up with my portfolio updates every Sunday. So if you appreciate that, do all these things, that thumbs up button, subscribe, hit the notification bell, drop a comment, let me know what you think of the video, and there is the thanks button down below if anyone would like to buy me a cup of tea that way. This is the Vested Interest Stock Screener. You can pause this and go through the criteria, but it is the way we will run through the video here. So we'll look at this criteria along with a little bit of extras, but this is what I look at initially as a screener. Again, just a way for me to run through thousands of stocks in the stock market and give myself a quick check on whether or not I want to do any more of research into the company. Must meet 5 of 8. If it was a bank, we'd add in price to book, then it's 6 of 9. All right, back to Tractor Supply Company. Check them out on their homepage, www.tractorsupply.com. That's www.tractorsupply.com. www.tractorsupply.com is their homepage. About Tractor Supply Company, for more than 85 years, Tractor Supply Company, ticker TSCO, has been passionate about serving the needs of recreational farmers, ranchers, homeowners, gardeners, pet enthusiasts, and all those who enjoy living out here. Tractor Supply is the largest rural lifestyle retailer in the U.S., ranking 293 on the Fortune 500. The company's more than 50,000 team members are known for delivering legendary service and helping customers pursue their passions, whether that means being closer to the land, taking care of animals, or living hands-on the DIY do-it-yourself lifestyle. In stores and online, Tractor Supply provides what customers need, anytime, anywhere, any way they choose, at the low prices they deserve. You can read through the rest of that, but that's really what they are providing, right? You can get the vitamins and shots for your animals if you have a small family farm. Maybe if you have some goats or chickens or something like that, maybe some cows. They really do that. I mean, I would recommend getting a veterinarian to help you out with that, but some people like to do it themselves. Gardening tools, garden tractors, that sort of thing. You can see here on the bottom, this is the tab across the top of their homepage. If you go there, pet and animal pharmacy, pet care, lawn and garden, truck and automotive, right? So you can get some parts for your vehicle, fencing and gates, sporting goods, horses, right? You got a family farm or ranch, outdoor living, clothing. So if you like, winter gear like we have here, Carhartts, for example, they sell those. So they are kind of your one-stop shop, almost like the Home Depot for outdoor enthusiasts, gardeners, small farmers. Like I said, if you got a small farm, now if you've got a huge farm, they've got some stuff for you, but you're probably looking other places there. I know I went there one time. My dad and I were doing adding a little some fencing in behind his house, so I bought a fence post drill, right, to dig out the fence posts that we were putting down. So they provide a lot of different equipment and material for farmers, or like I said, gardeners, that sort of thing. We are talking about the Tractor Supply Company. The reason we are taking a look at them, down 5.82% on the day, and a lot of things are down right now. A lot of red in the market the last week, the last quarter, really. So not surprising that this one's seeing a shot in the arm as well. We are talking about Tractor Supply Company, ticker TSCO, again out of the consumer discretionary sector. Closed out the day at $49.35. Looks like their 52-week range as low as $48.30, so they are right up against that, and their high of $61.53. definitely within 15% of a 52-week low and closer to that 52-week low currently. Market cap of $26.235 billion, a beta of 0.88, so they are less volatile than the overall market, even though there's a lot of volatility there today. PE seems a little elevated, $24.19 per share, though if they're growing fast enough, that could be justified. EPS, earnings per share, at $2.04 per share. Earnings date, April 24th, so coming up here towards the end of the month. Forward dividend is 92 cents, which gives them a yield of 1.76%. That 92 cents, they're a quarterly payer, so divide by 4 there if you want to know that, though we'll cover that towards the end of the video. Ex-dividend date was February 26th. Looks like they paid out last month, March 11th. So you would be in line for the next dividend, but you're going to have to wait a few months to get it. 1-year target estimate, at least according to Yahoo Finance, $58.22. So they see it going back up, but not quite to its 52-week high from where it currently sits. Jumping over to the right, I like to look at dividend yield theory to see if the company is potentially undervalued. To do that, you look at their 5-year dividend yield average of 1.41%. You compare it to their current 1.76, or over here where it says forward 1.76, same number. Since their current dividend yield of 1.76% is higher than their 5-year average of 1.41%, that speaks to undervaluation, at least according to Yahoo Finance. Now, payout ratio or dividend yield theory. Payout ratio is low. I like under 75%. They're sitting at 43.14, so it looks like their dividend is safe. They can continue to raise that dividend. No real worry about dividend cuts on this one. Talked about their ex-dividend date, so we'll drop down. Free cash flow, I want growing free cash flow over time. Typically, if a company has growing free cash flow, they can do some things with that free cash flow. They can pay down debt, make acquisitions, reinvest back into the company. They can pay a dividend, which this one does. They can raise that dividend, which is what we want, and they can buy back shares. Right, so it looks like they're doing that too. But looking at free cash flow, you can see here going back to December 2021, $510 million in free cash flow. Looks like a jump up in 2022, $583 million. Looks like a little bit of a decrease in 2023 to $580 million, and 2024, $636 million. So definitely maybe a drop here in 2022 to 2023, and then back up in 2024. Repurchase of shares here going back to December 2021, you can see 813 million. 2022, so yeah, their free cash flow was up, but they decreased their repurchase of shares to 728 million. Same trend in 2022, decreased that repurchase of shares to 618 million, and their free cash flow decreased. So I would definitely say 2022 to 2023 saw a decline, and then a further decrease in that repurchase of shares to 584 million. So free cash flow may be growing slightly, but they're adjusting that repurchase of shares along with their free cash flow growth, looks like. Now, jumping over to stockanalysis.com, this is another source I go to for information. And the reason I look at more than one source, you can see here, price targets were last updated January 31, 2025. So we are a couple months past that. So, right, this is a couple months old. The data is old. I want to look at more than one source so I can make sure the information I'm looking at is accurate and up to date. And I recommend that you do the same, 2, if not 3 sources, so you can verify data whenever it doesn't really match, or if it is outdated. Now, they have 20 stock analysts that have taken a look at this. They call it a consensus buy. If you were to go to stockanalysis.com, you could click on each one of these tabs, see how many might call it a strong sell, a hold, a buy, or a strong buy. Majority call it a strong buy, but you can see what that breakdown is of the 20 analysts if you go to their homepage. Low estimate of $47 would represent a 4.76% decrease from where it currently sits. Pretty close to their low estimate currently, but they do see potential for more downside. Average estimate of $58.87. That's pretty close to what we saw with the 52-week expected high there from Yahoo Finance on the previous page, and that would represent a 19.29% increase from where it currently sits. If it happened to hit their high of $67 estimate, that would be a 35.76% increase, and you could collect that dividend along the way. Now, looking at statistics, I like to look at return on equity and return on invested capital to see if the company is reinvesting its capital back into itself efficiently. I like 10% or better for both of these metrics. Return on equity sitting at 49.83%, much higher than the 10% I'm looking for there. Return on invested capital at 12.33%, again, over the 10% I'm looking for there. So would get the check for both of those being over 10%. Revenue growth at 7.42%. That's not a typical one I look at, but I like to see that almost double digits. And EPS growth is one I look at initially as part of my screener, 10.29%, much higher than the 5% I'm looking for there. Now we get into their dividend history here. Quarterly payer, as we said, payout ratio again low, under the 75%. I look for at 45.10. Dividend growth they're saying is negative, but I don't necessarily buy that because if you look back here in 2024, they paid out a special dividend. So their regular dividend does look like it's growing slightly, but this special dividend is throwing everything off. So they do have a growing dividend, though it's not growing very fast, right? Just a penny, a few pennies, a couple pennies, 1 penny there from last year. Yeah, okay, let's go through that here in a minute. Growth to 1 years, they've been growing their dividend for longer than that. Buyback yield is positive at 1.65%. That means they're buying back shares efficiently whenever the company is potentially undervalued. Shareholder yield positive at 3.49%, which we want to see. They do pay out like most companies on the March, June, September, December timeframe. Going back here to August 19th, 2022, you can see it says 92 cents, which looks like a huge dividend cut, but I believe there was a stock split on this company. So you'd want to look at that and kind of compare what the stock split was as far as overall price of the shares, plus their dividend dropped significantly as well. So now we go back to February 2023 at 20 cents and some fractions of a penny. They raised that up May 2024 to 22 cents and then raised it up again February 2025 to 23 cents. So they are raising their dividends slowly, and it looks like they're paying out special dividends on occasion, which is what this one in February 2024 looks like at $1.10. All right, understand the business. Again, they're a retailer. They focus on farmers and gardeners. That's the type of stuff that they are providing to you. You may have shopped at a Tractor Supply. I know I've shopped at the one up by my mom and dad's up by Carroll several times. Carroll, Michigan, if you know where that's at, shout out to Carroll, Michigan. My parents live outside of Mayville. Growing free cash flow the last 4 years, no. It was a little bit up and down. Definitely a decrease from 2022 to 2023. Growing dividend, yes. I know it says negative growth, but that's being thrown off by the one special dividend it looks like they paid last year. Dividend payout ratio is under 75%. Looks like about around 40%. Dividend yield theory says they're potentially undervalued, so check there. It is within 15% of a 52-week low, right up against their 52-week low, actually, so check there. Return on invested capital, return on equity, check there. I may change this to ROCE, which is kind of a combination of these two, and go with just one 10% or better. So I may make that change actually and just go with the ROCE versus looking at both of these because it is kind of a mesh of these two with 10% or better. Maybe I'll make that change going forward. Earnings per share growth equal to or greater than the industry or better than 5%. It is over 5%, so check there. So we're looking at 1, 2, 3, 4, 5, 6, 7 out of 8. This is actually on my watch list, has been on my watch list for a while. If I was to add something in the consumer discretionary sector, it would probably be this company or possibly Williams and Sonoma, which I had in my portfolio at one time and sold it for about a 20% gain, and then it really shot up. I should have held it, much like BABA, sold it for about a 20-30% gain, and then it shot up. So it happens. I'm not trying to time the market or time stocks. Sometimes I buy and sometimes I sell in inopportune times, but that is the nature of the market overall. But this is Tractor Supply. It is on my watch list. It is one I'm interested in adding to my portfolio. And the price doesn't look too bad, although a lot of prices look very attractive right now because the market and stocks are dropping like a rock. Well, let me know what you think. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Let me know what you think of Tractor Supply. Let me know what you think of the video overall. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. And if you have any questions, go ahead and drop them down below. Or if you have a company you'd like me to cover, like Tractor Supply, in the Stock Pick of the Day series, drop it down there. I'll try to work it in the rotation on a day it pulls back. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or see the advice counsel a certified financial advisor.